Morning, everyone. Excited to be here for this Friday. Hopefully, everyone is doing well. We had certainly an interesting weather event this last week here in San Diego, so appreciate everyone for getting on. Fortunately, here in San Diego wasn't too bad, but I know out in Imperial there was definitely some flooding and so forth. So, but do appreciate everyone for getting on today. We'll be able to have a good conversation about different lending opportunities. Again, my name's Danny Fitzgerald. I'm the regional director for the San Diego and Imperial Small Business Development Center Network, and we certainly are here to be able to help you, the small business owner, at no cost, to be able to navigate capital, be able to update your business finances, help you set up your business finances, help people start their business, and many other ways in which we help businesses grow. So we're excited to be able to do this today. Thank you to our panelists who are on today, and thank you to Marisa for always coordinating and being the behind the scenes. So just to start off, I think we have, because the SBA representative wasn't going to be able to be on, and so we do have a quick video from Lucy. And so Marisa, you got that queued up? There we go.
Lucy Montgomery from the San Diego District Office of the Small Business Administration. Special thanks to our award-winning SBDC for putting on this informative webinar, and also to the lenders on the call for sharing your expertise with the small business owners. You made a good choice to be on this call to learn more about lending. The SBA just recently celebrated its 70th anniversary. It has been our mission to aid, counsel, assist, and protect small businesses for 70 years. If you need SBA information translated to other languages, please go to sba.gov. This webinar is about access to capital. On this webinar, you're going to meet some lenders. How can the SBA help? The SBA can help with number one, with SBA guaranteed loans. And that's what I'm going to talk about briefly today. But also private investors, research and development awarded funds, and surety bonds. SBA guaranteed loans work in the background. So the most interesting part is that you do not go to the SBA for an SBA guaranteed loan. You go to one of the lender partners on the call. They provide the loan directly to the small business. The SBA works in the background. The SBA does this with approved lenders so that the lender can offer competitive terms, lower down payments, flexible overhead. We also work with resource partners such as our SBDC with counseling and education. You can use your SBA-backed loan just like a regular business loan. Launch, grow, repair, start, export, purchase land or real estate, renovate. The sort of loan programs available, we'll start with in the middle with our 7A loan. That's our flagship loan for working capital. Smaller version would be our community advantage loans. We also have export loans under that umbrella. A 504 loan here is for commercial property, owner occupied. What's going to happen here is that's a very good opportunity for you to get into a commercial property for as little as 10% down. If you're just starting out, you may like a micro loan. That's a loan under $50,000. Down here in the storm cloud, I have disaster loans. Just a shout out to our team in Maui right now. Best of luck as you help those survivors. If you have, speaking of disasters, if you have an EIDL, which is an emergency economic injury disaster loan for COVID, it's probably time to start repaying. Go to lending.sba.gov for information about repayment. The SBA has a way to connect with our lenders directly online, but I'm just going to go through this slide really quick because I actually think you have an exponential greater chance of securing a loan if you consult one of our resource partners and an event such as this webinar about how to talk to a lender. An SBA resource partner, a business advisor, such as an SBDC business advisor, can help you with a business plan, expense sheets, and finding out just how to approach a lender. There are 1,400 partner offices nationwide that can help you. In San Diego, we have the Veterans Business Outreach Center, SCORE San Diego. the Women's Business Center, and of course, your award-winning SBDC. Thank you so much for your time. I appreciate it. Thank you to the SBDC and have a wonderful rest of your day.
All right, fantastic. We appreciate the SBA being able to send in the video. I think it's important to kind of understand in particular how the SBA lending works. And I appreciate Lucy for putting that information out there. So we'll go ahead and jump right into our panel. And I'm going to kind of have folks go ahead and introduce yourselves as we go through this. And why don't we start with you, Andrew, since your name starts with A.
Thank you. I'm Andrew Crone. I'm Senior VP at Marble Bridge Funding Group. We are a direct lender, a commercial finance company by classification. We're now over 25 years old, and I've been doing this in the underwriting and working in small business for 23 plus years. We provide accounts receivable financing, purchase order financing, contract financing. We work with startups, the companies about 50 million a year in revenue, and we usually can get funding done in 10 days or less.
Fantastic. And we'll go ahead and go to Larissa.
Hi, good morning. My name is Larissa Diaz. I work for Accessity. We're a nonprofit CFI lender, and we do loans for people who want to start their business from scratch or grow their business. Our business loans run from $500 up to $100,000. I am the representative for Imperial Valley and Coachella Valley, but we do serve San Diego, the Inland Empire, Riverside, LA, and Orange County. Thank you so much for the invitation.
Thanks, Larissa. And we have two folks on from US Bank, Lisa and Rowan. We'll start with Lisa and then go to Rowan. You're on mute, Lisa.
My apologies. Good morning. My name is Lisa, and I also have my colleague Rowan on the line from US Bank. So we do service small business loans, or segments starting at 500,000 up to 25 million. Currently, I'm located in San Marcos, and my colleague Rowan is in San Diego Spectrum. And yeah, we do quick loans, equipment financing, practice financing. Yeah, pretty much it.
Fantastic. Ron, you want to introduce yourself?
Yeah, my name is Rowan, business banker at US Bank. Actually recently came from Union Bank after the acquisition, and been in business banking about 6 years now. And just to add to what Lisa said, US Bank is a full service bank serving businesses anywhere from 0 in revenue all the way up to 25 million and above. We do a full spectrum of lending services directly on our balance sheet, and we also wholly own 2 subsidiaries that provide equipment finance and merchant services.
Fantastic. Thanks, Rowan. And Fernando.
Yeah, good morning. Fernando Ponce with Primary Funding. Very similar to what Andrew does at Marble Bridge. We're a factoring company. We do purchase order finance, contract finance. We will do some asset-based lending as well. So we'll take some real estate or any other assets that we can leverage, inventory, things like that, and provide short-term working capital for small to mid-sized businesses. Primary Funding has been operating here in San Diego for about 28 years now. So a long time in the community, work very closely with many of the lenders here.
Awesome. Fred.
Good morning, Fred Crispin here. I'm Senior Vice President with United Midwest Savings Bank. I, along with my son, manage the small loan division on a national basis for the bank, focusing on SBA loans, 20,000 up to 150,000 for startup and existing businesses. Probably 90% of the loans we fund on a monthly basis are pure startups, so we're not afraid to look at them.
Fantastic. Melissa.
Good morning, Danny. Thank you for having me here. Melissa Crosser with Wells Fargo Bank. I have been in the finance industry for 18 years. And again, I serve directly here in San Diego, but can do business all across the country. We offer services such as lines of credit, commercial real estate, whether they're SB or conventional. We also do letters of credit and are very excited to be here. So thank you very much, Danny.
Fantastic. Thanks, Melissa. Last but not least, Gustavo.
It only works if you take the mute button, turn it on. So good morning, everybody. I just wanted to be a part of this session, and thank you for the invitation. I work for an organization called Civic Community Partners. It's a nonprofit lending institution. You've heard it from Larissa. It's a CDFI. We're an organization chartered by the Treasury Department to provide community development loans, small business loans, and we have a loan program called the Building Business Success Loan Program, which is catered to, our product is catered to businesses that are procuring contracts with anchor institutions, and we help them to fulfill those contracts with capital while they're getting paid, if you will, to help them carry the burden. And that's kind of a specialty niche lending product that we have at Civic Community Partners. Thank you.
Fantastic. Thanks, Gustavo. So appreciate everyone for being on. So we're just going to start with the general stuff, kind of introduce yourselves and your lender, and the organization you work with. Talk a little bit more about the types of businesses that you work with, and really kind of, how long they need to be in business, or if there's particular industries you kind of focus more on or not focus as much on that really kind of work better with your products. And why don't we go ahead and start with you, Fernando?
Yeah, we work with a pretty wide range of businesses. It can be startup, it can be an existing business. We really tend to specialize in the B2B industries, though, right? So because we want to leverage the accounts receivables or purchase orders. So any business to business industry type of business we do, with the exception of contractors. We don't really do well with construction. We don't do well with healthcare. But other than that, manufacturing. We've done a lot of consumer packaged goods here lately has been a big one for us that we've been doing a lot of. The food and beverage industry has been huge, and staffing is always a fun one. So that's the main thing. So if you have accounts receivables, we're probably going to be a good fit. If you're selling to consumers directly, we're probably not going to be as good a fit.
Fantastic. And Fred, in your intro, you touched a little bit on it, but can you expand a little bit more about the types of businesses you focus on?
Any business that's SBA eligible, which is a broad spectrum, we can work with. We're heavily involved with franchises on a national basis, both startup and existing. For, like I said, loans primarily 20,000 to 150,000. Although we are starting to expand that on up to $250,000, $300,000 loans. Typically, if a borrower gives us what we need on the front side, we're funding loans in as little as 15 or less days at this point in time.
Fantastic. And then from U.S. Bank, Lisa, Rowan, what about you all?
Yeah, so excuse me. So as a full service bank, we try to work with everyone that wants to work with us and needs our services. However, I will say that getting an SBA Express Guarantee gets the bank much more willing to lend than typical. Otherwise, we can fund from as low as $5,000 all the way up to the millions for real estate and things like that. So it all just depends on what you need. But most likely, being a full service bank will have something that fits your box.
Fantastic. And Gustavo, you touched on a little bit in your intro, but can you expand a little bit about kind of because the niches that Civic has?
Thank you, Danny. So I had shared that we have a product called Building Business Success, and it's a product that's geared to minority business entities or women-owned entities, just all the disadvantaged categories that own their businesses that outsource and cater to anchor institutions. So, for example, we might be helping a contractor who's trying to expand a particular school district space, and because they have a contract with a large institution, in this case, in my example, a school district, then we come in and try to help them, carry the cash burden of being paid maybe three months later after the fact. And so that's kind of our niche. We're looking for clients that have been around for at least 3 years. Although that's what's great about this particular Meet the Lenders, you can find a broad base of lenders to fit your particular readiness. But ours is a company that is small and interested in fulfilling contracts with a particular anchor that hires minority businesses, disadvantaged businesses in the community. We're not necessarily FICO driven, so we're basically more driven by the fact that you have a contract with a particularly large institution, a community business, if you will, that's large enough to have a piece of their business become part of your business as a vendor. So thank you, Dan.
Thanks, Gustavo. And Melissa, what about you at Wells Fargo?
Thank you. So we really help any small business owner who is looking at financing their accounts receivables. I've been doing a good amount of work with contractors here recently, financing lines of credit for them, service providers as well, so attorneys. I've been quite busy with that as well, and healthcare. Those would be the spaces that I would say I'm seeing some traction in as of recently. But overall, wholesalers and again, distributors, we are just staying occupied really in almost all categories. So we partner with a lot of folks here in this panel. So for whatever reason, we're not a good fit at the moment, we will absolutely, do a warm introduction to someone that can.
Fantastic. Thanks, Melissa. Andrew.
Yeah, thank you, Danny. So like Fernando, in doing accounts receivable financing, PO and contract financing, we strictly work with businesses that are doing business with another business, but we also have businesses that have B2C, or they're doing consumers, like a plumber might be doing doing homes and doing with consumers, working with consumers, but they're also doing commercials. So that part can interest us. So we do B2B, all different industries, whether we have consultants, we have food industries, we have engineers, we have architects, we do construction. All right. And we do contractors. So that's something we've been doing for 20 some years. And we do some healthcare as well with healthcare receivables. And they could be startups, or they could be companies up to 50 million a year in revenue. We can provide anybody up to about 5 million a month as far as receivable finance goes. And we have no minimums and no long-term commitment contractually. So we can move very quickly. And with my expertise, if it's not me, I would definitely recommend some of the people on the panel here, if it isn't me, or sometimes I can work with the panel. So that's something to be aware of. It's possible you can get more than one lender together. And I have that expertise and I can guide you through that way as well.
Fantastic. Thanks, Andrew. And Larissa.
Yeah, so here at Accessity, we can fund people who are starting the business from scratch. They can use the funds, to pay the permits, to pay any lease expenses. And we can also do for expansion purposes. Let's say if it's a restaurant and you guys need to update your kitchen. We do try to stay away from certain industries. One of them could be construction, but we can fund machines. So if you were to need working capital, I would probably send you with Fernando. And if you would need to buy a machine, I would probably help you get that machine for your construction company. We don't do Airbnbs either, or any rental spots, but most of the industries we can do. Like Andrew said and Melissa said, if there's any questions, don't hesitate to reach out. And if Accessity is not the best fit for you, we can most definitely send you back to their SBDC advisor and brainstorm to send you to the best lender possible. Thank you.
So fantastic. So I appreciate that all of you talk about how you work together. And I think that's really a lot of what we want to highlight in these panels, is be able to show that there's a lot of fantastic lenders out there that work together and are interested in you as a small business owner. But what I think is critical is also understanding that behind the lender, the organization, there's a person. And it's important for you to recognize that and realize that there's people there that care about your business, that become trusted individuals for you. Because there's a lot of different types of lending that's out there. You probably get bombarded as a small business owner with text messages, emails, advertisements, etc., for quick cash access. And that certainly is definitely a big problem. And so I appreciate everyone kind of highlighting on how that they do work together and have that type of interaction. So next question I want to kind of bring up though is we know what the current interest rate environment is. I mean, it is what it is. Our interest rates are a bit high right now, and certainly that they're much, they've gone up quite a bit over the last few years. And my question to you is how has that changed some of your business practices, and what in particular you're telling businesses right now that they need to do based upon the current environment that we have? Why don't we go ahead and let's start with you, Fred.
Really has not affected how we loan money at this point in time. At the smaller loan amounts that we concentrate on in the small loan division, it hasn't affected the monthly payments drastically. I mean, they've gone up some, obviously, as rates have climbed up. We're now at like 11 and a quarter on a 10-year fully amortizing loan, but we have not changed any of our lending criteria. If anything, SBA with the recent changes has loosened, if you will, the criteria for the small loan product. And it makes it much easier, much quicker for us to get the loan apps in, get them processed, and get them funded. Like I said, in the last couple of weeks, we've been funding loans in under 15 days. From then, and that's from the date of loan application to the day we wire the money into the borrower's business checking account.
Fantastic. And Melissa, what about you?
Thank you, Danny. So I have seen, rates climb on clients' lines of credit and credit cards, unfortunately. So I've been having more conversations around consolidating debt and putting things under a loan instead of having multiple variable products out there. Of course, rates have from last year pretty much doubled essentially. So, but I will say clients are still purchasing commercial real estate. Thankfully, there is a value of purchasing right now versus leasing, and most situations, especially because now you have an asset on your balance sheet instead of not being able to take credit for those expenses that you're paying on your tax return as much. So currently at the moment, I am focusing on assisting clients that currently have variable loans with other financial institutions. Typically that happens when clients are not prepared to purchase commercial real estate, and so they really want to do it really quickly. And so they put themselves in a situation where they're taking in loans that at that moment really make sense for them. But right now, some of those loans are between 9-10%. And so refinancing and helping clients bring down those particular loans to a fixed rate for 25 years. So yeah, been quite busy, thankfully.
Fantastic. Thanks, Melissa. A lot of good information on that one. Fernando.
Yeah, I would say that the biggest thing with the increasing rate environment is, understanding that rates are higher, right? I've had a lot of situations just this year where, we get approvals in place. The borrower doesn't like the rate. They say, you know what, I'm going to find something better. And they come back 60 days later and they're like, hey, I could not find anything better. I want that deal that you offered me. And I'm like, that's gone. It's not around anymore. So just understand your return on investment for the money that you're borrowing. If it pencils out and you have an offer on the table, you probably want to take it, because the odds are that if you wait around, capital continues to dry up as rates go up. That will continue to happen. And it's going to be harder and harder, as it already has been this year. It will just continue to get harder to get to find loans and to find capital. So it's very important that you know exactly what the threshold is for you to make money on the money that you're on what you're borrowing. And if it makes sense, if it pencils out, just take it and move along. If not, then don't take it, right? You know when to say no, and you know when it's not going to make sense.
Fantastic. No, that's critical. We've seen a lot of that at the SBDC where patience was not a virtue in these instances, and they kind of got bit by waiting a little bit, seeing the interest rates rise. Larissa, what about you at Accessity?
Yeah, so like Fernando said, I do have a lot of clients that tell me, hey, 6.99 to 14.99%, that is so expensive. I'm going to look for something else. And I just remind everybody this is a business loan. You guys can write off the interest that you pay throughout the year when you do your tax returns. If you get a personal loan, there's no way you can say, hey, this is a business loan. I also remind them, maybe if you own a house, you can do a HELOC loan, but those interests are variable, like they can change at any time. So just that reminder that you're better off with a business loan. Credit cards to fund your business is not the best thing to do. And also, I mean, why put your house on the line when you can just get a business loan and protect that? Or even opening a business is a high risk. So think about all those stuff and do your homework, ask questions. And yeah, like Fernando said, people try to negotiate, but unfortunately we're at a time that there's no negotiation right now with our interest rates.
Thank you. Lisa and Rowan, what about the U.S. Bank? Will let one of you two answer?
Yeah, so banks as a whole operate off of cost of funds. One of the biggest ways a bank makes money is going from our cost of funds to our lending rates and making money on that interest margin. So as rates go up, the cost of funds for banks also goes up, and that's when a bank takes a step back and says, "Hey, we need higher credit quality, we need safer lending prospects, and we need to lend to people that we know don't have any chance of defaulting." So as a whole, across the industry, you can find that it's possibly harder to access capital from a tier one lender like a bank. And that's when we have people like Andrew, like Fred, like Accessity, that kind of step in and pick up the slack. The biggest piece of advice that I would give you, again, is to be careful when you're borrowing money, to make sure that it's for a direct purpose that will serve your business and will generate either more profits, more revenue, something positive that can be measured. And just to be careful about leverage. If you over leverage yourself on an adjustable rate product right now, it can be very dangerous for your business cash flow going forward.
Fantastic. Andrew.
Yeah, I would say that as far as Marble Bridge goes, our prices haven't changed at all. I know our cost of funds has gone up dramatically, but we've held the price, so we haven't changed in the last several years. I know that when I'm reaching out to some of my SBA partners and nonprofit lenders, and I'm talking to my clients about how to get money from them, and some of them are investigating that. They're also sort of shocked at how high the rates are right now. So I am getting some pushback on that. But the reality is we are in a inflationary environment that doesn't look like it's slowed down to some degree. And it now looks like it's maybe changing a little. And if you watch the Fed today, they talked about maybe keeping rates up higher for longer. So this may be business as usual for quite a while to go. And so you got to do what every other business is doing right now. If your cost of funds is going up, you got to calculate that into your overhead, and you got to raise prices to keep up with it. And that's how people survive. If you can't raise prices in your business model, you're going to have a problem, because labor will probably continue to go up and materials are probably going to continue to go up. And so you have to be adjust accordingly. It's not the first time we've been in this type of environment. As I told some of the other lenders earlier before we went online, my first house was 12.5% interest, and I thought it was a bargain at the time. And I was able to make it work. So people will figure out a way to make it work, but you will have to adjust your business model accordingly as far as capital goes. But from our end, I guess since we haven't raised our prices and a lot of other institutions have, we actually look cheaper than we have in years on that side. And the cost is low enough that they're easily able to add my cost into their costs and pass it on to their clients. So from that respect, I'm actually seeing a lot more interest in our product. And in this environment, we have no minimum. So it isn't like you're getting a big loan. You're just borrowing as you need it. So you're able to borrow when you need it. If you don't borrow when you need it, you have zero costs. So you're able to control the costs pretty good at our end. The last thing I would caution everyone on, and I think Danny alluded to this, there are a lot of these solicitations from what I call merchant cash advance lenders. And I'm seeing that more and more and more as some businesses are getting desperate for capital. And it is not the way to go. As far as I'm concerned, it is only hurting them, and it's retarding their growth, and they're having more and more problems with handling the payments once they realize they made a mistake. And every day I have different stories in that category. And I'm out there basically trying to help these people get out of those loans into something that works, like our product, or with one of our nonprofit partners, bringing them in together to get it done. So be very wary of those types of loans, and focus on lenders like you see in the panel here will be better for you.
Fantastic. And Gustavo, we'll wrap up with you on this question.
Thanks, Danny. The current economic situation hasn't really impacted our underwriting policy. I mean, we're set up by the Treasury to be more flexible, if you will, as a nonprofit community lender. Our rates still remain single digits, so we're very happy about that. But share some of the concerns that my lending colleagues. Obviously, the cost of funds play an effect on our rates, but luckily we're still at single digits. What we have seen is some more difficult underwriting decision making. We've had to go out a little more to the state to guarantee some of these loans. And for those folks that are on the call, obviously to learn here, that's there's some institutional assistance that we can get when the loans are tough, when they're like teetering on maybe not being able to make it happen. We do make it happen because we have a guarantee against the loan under certain circumstances, qualifications. But more often than not, we've been very successful, and even on some of the tougher deals, we've still been able to provide a yes to a loan request. But all in all, I think we still remain the same type of nonprofit lender, if you will. So luckily, thus far, we haven't had to change our policy or even go into double digits. So we're very happy about that. Thank you, Danny.
Thanks, Gustavo. So again, you can see that, yes, there is a lot of fluctuation within the market. I mean, the economy is always going to ever change, but that's why you, again, coming back to what I said on the last one, you work with your lenders, you talk to them. They have a lot of experience. They've been in the industry a long time. They're interested in you, the small business owner, and your small business success. And so they're going to be able to help you find options that will work for you. So I think that's really, really important. And of course, see the discussion that was brought up from Andrew, and Rowan's dropping it in the chat about really kind of the thing to avoid, which are these merchant cash advances. We've heard of the evil of payday loans, and probably that's the more common thing that people know. Well, these are the same thing, but for small businesses, and they're critical to be able to avoid. One other thing I want to highlight is what Gustavo talked about there at the end. So just as Lucy talked about at the beginning in her video, how the SBA guarantees loans, Fred has talked quite extensively about it. There's some great discussion in the chat about SBA guarantees. The state of California does something basically the same. And so that there's options for lenders. So they're going to be working behind the scenes to find different options for you, find a way to be able to get that loan to you. And so that's why it's important to work with a lender who is a credible lender, someone you're talking to and working with, and they'll be able to work with you and find some particular options. All right, well, let's go to a fun one. I want each of you to kind of think of a success story, success case. Feel free to anonymize it if you feel the need to, but something that really jumps out to you and of a client that you recently helped, and be able to kind of have that. Melissa, you got a big smile on your face. So I'm going to go first to you.
Actually, today we are drawing loan dogs for a client that I'm helping them with their third building. So it's very exciting to be able to help and see a client grow and expand their business. So they do artificial limbs, and they're going to be expanding to the Hemet community. And it's beautiful to have a business owner who has all their financials in order. And when you ask them for something, it just happens flawlessly. It's not something that happens every day, when we're working with clients. And so this has just been a very easy process. I'm very grateful for the opportunity to have relationships with my clients, to be able to help them transition into their next building and see them grow and expand. And most importantly, see the impact that they do to the community and how they serve their clients. So just overall, this is good. Happy. Thank you.
Fantastic. Thanks, Melissa. What about you, Andrew?
Yeah, I've been working with SBDC, who referred a client to me that was in the trucking industry, which commonly uses accounts receivable finance. They've been funding the growth, or I should say, the slowdown of the payments that have happened, and that's something else that I'm hearing as a recurrent theme in the marketplace, that certain large corporations and various industries are slowing down on the payment cycle. So it's stressing out the small businesses, so has to make payroll, pay their subcontractors. And this trucker was an example. And of course, they got hooked into the MCA loans, and they went from one to the other to the other. Basically, all the profit of the company were being sucked out in these loans. They weren't making any money. They were getting deeper into debt. And so the SBDC brought them to me. We looked at it. We went over it, and then we also discovered that the accounting people they were using were totally doing everything wrong. And we had a major call with them about 2 weeks ago and discovered they don't even know what they're doing. And so I've had to advise the client of that. And we've hooked them up with somebody who can help them and put everything together correctly. And we rebuilt the financials ourselves in order to figure out whether they're making money or losing money. And they are making money. They finally paid off the last MCA loan, and they're not going to touch anymore. And within a week or two, we should have them signed up and ready to go. And they've admitted now that they fully understand our type of financing and that we can fund up to $5 million a month. They believe they can go from 4 to 8 million in less than a year, double the business. They just need the cash flow. They can bill daily, they can bill weekly, and we can fund every time they fund an invoice or they turn one in, we can fund, give them the cash flow, and they're super excited to get on with us. So it's a good combination of working with the SBDC and helping the client figure things out, and it's going to be a win-win for everybody.
Awesome. Thanks, Andrew. And you, Fred?
Yeah, we've recently helped a borrower that we funded a couple of years ago now with a startup franchise. He's doing extremely well and wanting to expand his territory. So he's come back for additional funding to grow the business. And so that's always fun to do.
Awesome. And Lettice, I'm sure you got some fun ones.
Yes, we just funded last month a client who would sell perfumes out of the swap meet. We actually had a really big disaster here in IV. That swap meet got burnt out, and they didn't reopen. So the client was selling e-commerce and trying to get clients to sell them through like big bulk so they could resell perfumes. And we were able to fund this client last month because she's ready to open her storefront. So that's pretty exciting. And if you're looking to do that big move, we're here for you. So I'm really happy for them. I don't know if anybody here is representing Chase, but this was a Chase referral, and we're super excited to help out that client.
Awesome. Thanks, Letisa. And Lisa, I bet you've got a story. We'll get you talking now.
Hi, can you guys hear me?
Yep.
Okay, so yes, we actually have a great success story. So this is actually how we were able to leverage one of our business partners. So we made a referral to the CDC that was able to help one of our doctors in the community to get an expansion loan for $300,000 to open up his third location. So we do have a direct contact at the CDC, and that's just a way to show how if we're, for whatever reason, not able to assist our clients, we also leverage other business partners in helping them grow their business as well.
Fantastic. Thanks, Lisa. And Gustavo, you always have some fun ones.
Appreciate that, Danny. Yeah, just kind of ironic, we've become lately the go-to to fund commercial electricians companies, electrical companies. The word got out that among 2 commercial electrician companies have been able to successfully get financing to, again, carry the burden of waiting for contracts. And so words come out. So it appears that now in the electrical world here locally that we can assist. And so now all of a sudden our portfolio, our pipeline seems to be full of electrical, commercial electrical companies that are doing contracts with the school district or with the airport. We're happy to fulfill that area to help them obviously become successful. I'm also intrinsically thrilled and proud that we just funded a nonprofit. We heard that we can fund nonprofits who also are in the contract business. not to not to put their name out there, but there's a particular very visible nonprofit in San Diego that just received a significant contract to provide health and human services, and so they have to hire more people, buy more materials, and so based on the fact that they have a contract with the city of San Diego, again an anchor institution, we've been able to underwrite their request for $500,000 to carry their burden. So we're very excited that in two industries, whether a nonprofit or electrical companies, we seem to be filling a niche. So we're very happy.
Fantastic. Thanks, Gustavo. And Fernando.
Yeah, thanks. We recently actually just got a referral also from the SBDC. It was a security staffing company. We just got them set up. They received a large contract from LA Metro to provide armed guards, and they needed help, cash flowing that because they were going to be adding, I believe, 15 guards on just from the get-go. So we were able to talk to them over the past month here. We got everything set up. And we're just getting ready to send funds out here soon. So that was a great one, great fit for us. And again, we love the partnership with the SBDC. They always know who to send us.
Fantastic. Thanks, Fernando. And what about you, Rowan? You got a story?
Yeah, I was working with a lady in Encinitas, and she wanted to start up this company that does lighting supply for businesses. And as a bank, we weren't ready to fund her, but I actually referred her out to a few of my contacts, including Mr. Andrew Crone over here. And eventually someone picked up and said, okay, we can factor your invoices, fund your purchase orders. And I got a call from her the other day, and she said she won a $3 million contract for Camp Pendleton to supply lighting to that whole Army base. So always great to hear those kind of success stories. And that kind of shows the value of participating in this network. These are great resources. And if one of us can't do it, probably someone else that's affiliated can. So utilize these resources.
Absolutely. No, that's fantastic, Ron. So that's going to be a good segue to my next question I'll ask you folks, which are, we'll give a couple of tips for businesses to make sure that they do, and maybe even some pitfalls to be able to avoid for as they're getting ready to prepare for small business lending. And why don't we go ahead and start with you, Gustavo?
Thank you, Danny. I think one of the tips that I would probably suggest to any small business that's applying for money or requesting money is to be prepared. I think one of my colleagues earlier said that, I believe it was at Wells Fargo, right? That's not every day that you get an application that's tight, that's clean, that has everything ready to go. And more often than not, we see people that need the money quick but aren't prepared yet with their financials, with their tax return, everything that I think all of us lenders would need to make a good credit decision. So have that information ready and available, so when you apply, it's a much smoother process for all of us. And then I think just to piggyback on that, Danny, I would probably say as a suggestion is, don't smudge the numbers. Don't lie. Somehow some issues come up and the truth comes out, and so it just it leaves a bitter taste not knowing that maybe perhaps you're not being totally honest with us, and that doesn't bode well. So be frank, be honest, and be ready. Thank you, Danny.
Thanks, Gustavo. What about you, Lisa? Oh, you're on mute still.
Hello, can you hear me?
Yep.
Okay, so I would say some tips would be just to be prepared, to have a good business plan if it's a startup business, to have good financials, and keep good reports of the accounts receivables and cash flow forecasts. Something that you would want to avoid would be to not misrepresent anything. Every lender is going to pull credit, so we're going to find out eventually. So just be completely honest, report all income, and utilize your resources. If you have a CPA that you work with, your bookkeeper, just make sure that you're doing your research, and don't commit to anything until you are fully sure of what you're getting yourself into.
Fantastic. Thanks. Larissa.
Yes. So my tip is, if you're growing your business, please do not come out negative at the end of the year when you're trying to look for a business loan. So if your plan is to grow, and we see those tax returns and you have a negative of $100,000 and you made $100,000, then there's no way you can show capacity that you're ready to expand that business. Also, very important, if it's a startup or an expanding business, make sure that throughout those first, let's say for 4 months or 3 months, you're depositing as much money as you can. So there's a way so we can have some cash flow on those bank statements and we can lend you the most money possible. So those are my 2 tips.
Fantastic. Those are great, Larissa. Fred.
Yeah, my first suggestion is make sure you know what's on your credit report. As the small loans with SBA are all credit scored now using the Fair Isaac small business scoring model, you need to make sure that everything on your credit report is accurate. If there's inaccurate information, get with the credit bureaus and get that cleaned up before you go to the lender.
Awesome. Fernando.
I would say time is your ally. I get so many deals that come across my desk where, when I ask how soon do you need to be funded, the answer is always as soon as possible or yesterday. That is not a situation you ever want to be in as a business owner, because it's going to force you to make decisions, you know, that are maybe not going to be in your best interest, right? So if you know that you're going to need capital, or even if you don't think you're going to need capital, you should probably have access to it at some point, because especially when in economic times like this, where there's a lot of uncertainty, you just don't know. I've seen companies take huge profits, and then in 6 months, because things didn't go the way they thought they were going to go, they're suddenly, they're running around trying to find anybody who will lend the money to just to try to make it another 6 months. So make sure you do things ahead of time. You look ahead, try to put things in place prior to you needing them. That's obviously not always going to be possible, but as much as you can, you want to try and plan ahead, and that way you're able to look and find the right lender, because the right lender is going to make a huge difference, right? There's lots of lenders that'll lend you money. It's not always going to be the right fit. So if you find the right lender with the right fit that's going to work really well with you, it's going to go a long way in helping your business grow.
Fantastic. What about you, Melissa?
So my first tip would be to start with the SBDC. I think that's a great place to start. They'll help you make sure that you have everything in order prior to even talking to a lender. Having your financials in order is extremely important. Understanding the why behind the request. If you're coming to a bank and saying, I need, 200,000 line of credit, or whatever it may be, understand what the purpose of that product will be for, how is it going to help your business grow. And also, I would say, really have an advisor that can consult you within your financial institution. So have a relationship with your bank. Make sure that they understand what your timeline is. If your lease is coming up in the next couple of years, start getting pre-qualified. We only do financials once a year. So it's not very easy to make a change in the middle of the year. And so be proactive to really have a good understanding of what your liquidity should look like in order to be able to purchase that property or the next asset, whether it's equipment. So yeah, that's it. Thank you.
Fantastic. And Andrew.
Yeah, I would echo what Melissa said. The SBDC is an unbelievable source of help. There are all sorts of consultants, finance consultants, marketing consultants, government consultants. It's all free. You can't beat the price. So wherever you are, whoever's listening today, you should reach out, you should sign up with them and let them guide you and get the advice. Secondly, lately, I don't know why, but lately, I've been seeing businesses that are what I would call fairly sophisticated to get to 5 to 20 million in revenue, and yet the financials are wrong. And on top of that, the owners don't understand their own financials, and they're in the business. And it's amazing to me. So, you want to reach out. If you're going to pick somebody to do your books, outside your company, just don't hire a bookkeeper because they say they're a bookkeeper. I mean, if you want to get somebody certified, you can get a certified QuickBooks expert. And at least you know you have somebody who's had the training and understands it. But you want to reach out to, you should have always a team of outside advisors, whether it's a CPA. If you don't have one, you do need to have one. You don't have to have the biggest firm. You can pick a small boutique company, but you need a CPA, you need a lawyer. You need certain people in your side that you can go to and ask questions to, that they can refer you to people that have the expertise you need. Because again and again, I'm seeing businesses that are relying on people outside that aren't qualified to do what they're doing. And they don't even know it until they come into me. And then I go through their financials, their business plan, and what they're doing. So you want to do that. And third, in this economy, you always want to have two plans. There's a plan for growth, but also a plan for shrinkage. You should have both ready so you can move very nimbly if things change in the economy. So those would be my advice.
Fantastic. Rowan, I'm going to throw you a minor curveball, but I know you'll be able to answer it. Can you, or did we lose you, Rowan? All right, we'll come back to him. Then I'm going to throw someone else one. I'm going to throw Fernando. You talked about kind of describing your product, and it's similar to what Andrew has, a term factoring. What is that?
So factoring is essentially we are buying invoices for completed work at a discount, right? So you have $10,000 in completed work that you've done. You're going to get paid on 30, 60, or 90-day terms. And we are saying we will buy those invoices from you. We will discount it depending on how long we have to wait to get paid, anywhere between 2 to, let's say, 5%. And we give you that cash up front. We sit and wait on the invoice. When it gets paid, we receive the payment, and we give you back whatever the difference is in the residual or the reserve, and that transaction is complete. So it works very much like a line of credit, but is based on the specific invoice by invoice transaction.
Fantastic. Thank you. All right, Rowan, we got you back now.
Yeah, sorry about that.
No worries. So my curveball to you, it's not a bad one. So, because I see in the chat, you're familiar certainly with SBA guarantees or government-backed guarantees. What is that, and what does it mean for the borrower versus what does it mean for the lender?
Yeah, so the advantage of an SBA guarantee, and there's varying degrees based on the product. For small businesses, the most common one is just the SBA Express, which can apply to all lending under $350,000. And what the SBA does is they guarantee half of the loan. And what that means for you, the borrower, is because the bank suddenly offloads half of their credit risk on the loan, they're suddenly willing to lend more aggressively to you. Maybe your cash flow isn't as high as the bank would like it on the conventional side. Well, the SBA will give you a lower cash flow requirement, right? If maybe your credit isn't as good, maybe your industry is considered high risk. These are all things that the bank is willing to let go if we get that SBA guarantee for half of the loan. As far as, for the bigger ones like commercial real estate or acquisition finance, the SBA will guarantee those to varying degrees based on loan amount. But at the end of the day, it all serves the same purpose, which is to allow the bank to take greater risks and to approve deals that they otherwise would not approve.
Fantastic. Thanks, Rowan. And Melissa, your minor curveball is you talked about different types of loan products, lines of credit, fixed lines, real estate loans, et cetera. Can you just kind of do some little vocabulary lesson for folks?
Sure. So lines of credit are really going to be for customers who are needing short-term working capital. Really, I would say if you're looking to payroll, for instance, trade discounts, that's more so what we would be using a line of credit for. When we're looking at a loan, the repayment, depending on the type of loan that we're doing, if we're consolidating some debt, we might be looking at 5-10 years. If you're looking to do like a business acquisition, it's a 5-year note, meaning that it's fixed for 10 years and amortized over 10 years. Our commercial loans here at Wells Fargo can be fixed for 25 years and amortized over 25 years. Sometimes depending on the lender and depending on the property, some of my lenders might offer something that's fixed for 10 years and amortized over 25 years. So at that 10-year point, that note would have to be refinanced if not paid in full. So a lot of it will depend in regards the recommendation that we make as a lender will depend on the need. And so if it's something that is going to be repaid fairly quickly, and you're looking to, maybe it's seasonality, maybe it's inventory, you're looking to use it and pay it off over a period of time, we have those lines of credit in place. And some of them are evergreen, meaning that they're there. We can approve up to 150,000, and that line of credit is there for the life of that line of credit, and then we won't require additional financials. But if it's an asset secure line of credit by accounts receivables or inventory, then we'll start collecting financials on a yearly basis. I hope I answered your question.
You did. That was fantastic, Melissa. And Fred, for you, because you have kind of a specific type of product, but it's kind of the base kind of ideas in terms of what documents and what information you need from a borrower, at least to collect, because there's a minimum pieces of information you need.
Yeah, initially, we have a very small, brief loan application that all we need initially to score the loan. And that gives us basic information: name, social security number, address, type of business, that sort of thing. From there, it's a matter of once we approve it, that usually occurs the same day we get the loan application in. Then we'll send the borrower a checklist of what we're going to need for their specific deal. And the quicker they get that to us, like I say, the quicker we can get that loan funded. We've funded several loans here in the last several days that have been like 11 days from the date we got the loan application. So,
what are some of those documents that are typically on that list?
Copy of their articles of incorporation or LLC documents, whatever the form they may be. A copy of their business ID with IRS. Hell, my mind just went blank.
I threw you a curveball, Fred.
That kind of information, just basic information that we have to have for SBA. If they're a startup business, we're going to have them complete a 2-year projections, and we'll give them an Excel spreadsheet to put those in, so it's already set up in a format so that my underwriters can look at the same thing on every deal from a format standpoint. There's nothing elaborate there.
Fantastic. Thanks, Fred. And Andrew, you talked a little bit about the merchant cash advances and some of the predatory lending. Can you just kind of quickly define kind of a little bit more what that is and kind of as you've seen them?
All right. Well, I've seen more than I want to see in that category. So many years back, merchant cash advances seemed to emerge after the last financial crisis. And they went after companies that were retail based that had credit cards. So they seemed to target restaurants, retailers like furniture stores, and they were funding them based on Visa, MasterCard. So that money would be committed to the merchant cash advance lender. They'd also have access to your bank account, which is what they still do for all the types of loans they do today. So they have direct access in. And they're going to have a rate of somewhere around 15 to 60% interest, depending on how it goes. So if they give you money, let's say they give you $100,000, they do move quick, which is one of their strengths, and why a lot of people get hooked up with them. And they do it with very little information. They don't really try to understand your business. They just run credit, and they look at UCCs, and they look at your tax returns, and they come up with a number, and they give it to you, and then you got to pay it back usually, and this is the key, in 9 months. And they may take the money out of you. They may give you 100,000, and then they'll charge you a lot of points, 4 or 5 points. So you're not really getting 100,000, you're getting less. And then from that point, they're taking the money out of your account daily, weekly, or monthly, depending on the company that you're with. And so it looks good in your bank account the first month, but each month that goes by, the money keeps draining from your bank account. And what happens is the interest rate is so high that the businesses are offered 3, 4, 5 months into the loan, another loan at usually a higher rate to keep you on board and to keep getting that money coming in. And so the other problem is that once you realize you made a mistake and you have the opportunity to pay them off early, a lot of times you got to pay all the interest off right off the bat. And so that's where the rate can get to 60, 80, 100%, because you're paying all the interest and you haven't even got the use of the funds to get rid of it. Just to be known, and I'm sure some of you in the panel know this, the state of California now requires full disclosure from these guys. Before, it was more like a shadow bank. They're in the background. And they've also included Fernando and my industry in it as well, even though we're totally different in the MCA loans. So I'm sure Fernando has his documents set up. We now do full disclosure, meeting state of California laws. And I've read in some of the trades that 60% of these predatory lenders have now pulled out of California. They're not going to try to do the disclosure anymore because they preyed on businesses without giving them the information. So the businesses just saw money. They didn't know what the rate was. They didn't know what was going on. They didn't know what they can do. And they would come in and they would get these loans out there. And then later on, the business would finally figure out what's going on. And then they found it very difficult to get out. And even at that level, some of these businesses went to 2 or 3 or 4 of these loans. And at that point, they're headed to bankruptcy. And all these guys are lined up, and you've guaranteed each of them that you're going to pay the bill, and they will sue each other, and you're going to get sued from all of them, and it turns into a big ugly mess when it goes down. So that's sort of a quick shot of that. But the advice is don't ever get involved with them.
Absolutely. Thanks, Andrew. Lisa, I'm going to ask you just kind of a quick fun one. Why do you like helping small businesses?
Yes, I'm very passionate about assisting small businesses. Coming from an entrepreneurial family myself, I actually grew up with my parents owning a Salvadorian restaurant in Vista. So I actually went through all the struggles. I went from being a dishwasher to being a hostess to taking orders, and just seeing my parents develop that business, it actually allowed them to free up their time to enjoy their time with us, their children. Opened up, the family segment. Actually, my father owns multiple businesses. He also owns a garage store business, local in San Marcos. So just seeing that as I grew up actually opened that passion for me. So I just love being part of the process, whether it's a startup business, whether it is just getting their business credit established, getting like equipment financing, getting a business credit card, just educating clients. So that is definitely just makes me feel so fulfilled. And just knowing that I'm part of a process. I don't know if you guys are familiar. It's just real quick success story. I worked in Carlsbad a couple years ago. If you guys are familiar with Carlsbad Outlet Mall, there is a lady that owns the Carlsbad Cookie Company, if anyone is familiar with that, or Bitchin' Sauce in Carlsbad as well. So they were actually my clients previously. And just seeing where they started from the beginning, from opening their first initial business checking account, getting them set up with the business credit, to where they're at now, established businesses that have been able to make it through COVID. That for me is just amazing. The fact that I was fortunate to be able to be a part of that process. So that's really what makes this job just so amazing for me, and what I'm passionate about is just helping others grow their business.
Fantastic. I think that's a great place to end, and I appreciate those stories, Lisa. And I agree with Larissa. Now I want a pupusa or maybe even a cookie. And so we appreciate all of that. And this is the kind of passion, as you saw with Lisa, you see it with everybody. They care about small businesses. The 120 of us that work at SBDC here in San Diego and Imperial counties, we care about small businesses. Both Marisa and I put the information in the chat, and certainly you were able to visit our website to sign up for this webinar. We have plenty of free advisors there. That's no cost to you. You sign up. It's confidential, but these are folks that have been ex-bankers. They have been ex-lenders, ex-CFOs, and so forth, and now are really giving back and enjoying the work that they do with SBDC. So I'd like to thank everybody for being on. Andrew, Fred, Larissa, Fernando, Melissa, Gustavo, Lisa, and Rowan. And you all have a fantastic weekend. Bye-bye.
Bye. Thank you so much.